Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the volatility index, ticker symbol VIX. As I zoom in here to this chart, you'll see that I left my lines on the chart from last week's report where I said that we would most likely move lower, and it's right on this day, the 22nd of July, that we hit that pivot point to the penny. And now looking forward, I believe that the VIX is going to start to move up with my end line target here over a 2 to 3 week period up at around 28.53. So I'm leaving that one in place. Notice how the oscillators down below are starting to pivot up. So as I magnify that, you see the stochastics is pivoting up. And we have a positive divergence on the CCI. Notice that we have a lower price low from this low back here, but we have higher lows showing up on the CCI. That's very significant. In fact, we saw that a while back when we had a low back here, followed by a lower low, and we had these positive divergences before we saw a big spike in the VIX. Now, the reason I'm starting off with the VIX is because I use it as a leading indicator for the general markets. It's also known as the fear index, and the VIX dropping tells us that investors and even traders are relaxing with their positions. They're not getting crazy, very little profit taking at this particular point in time, but that could change next week. As we look at SPY, you'll see this is another daily candle chart. I left my lines on the chart right here from last week's report. Last week I said that we would move up to 389.98. That's exactly what happened. And then we moved further to this resistance gap fill point right here. Now notice what's happening. Yesterday on that green candle, we had a higher low, higher high from Wednesday, but we had this drop in volume. That's usually what you see. I paid a lot of attention to volume. When the volume is dropping on the way up, it's bearish. When the volume is dropping on the way down, it's bullish. In addition to that, what do we have? A hinge on the stochastics, a hinge lower on the CCI, and when that CCI crosses below that red line, which is the 100 mark, that will generate a sell signal for that ETF. All right, so keep that in mind. I'm going to go lower here now as I forecast into these markets. I'm going to just draw to the right by looking to the left. I'm basically duplicating these angles right here. I think that next week we're going to duplicate the similar angle that we had the week before last, and you can see how the market drifts off in these similar angles here. I believe that the markets right across the board are going to move right back to that 20-period moving average. So my forecast for SPY is 389.20. I'm not looking for a fill on this gap, at least not yet, but maybe the week after next. We'll have to see what happens with the Fed on Tuesday and Wednesday, 26th and 27th. The FOMC is meeting, and we'll see how they set expectations or meet or maybe even disappoint on some of the expectations out there. I don't try to second guess the Fed anymore. In fact, I don't believe anything they say. I just actually said that on a previous conference call. I just cannot believe anything that they're telling us because everything to this point has been inaccurate, and I don't want to even forecast what they're about to say next. So anyway, that's a side tangent we could talk about another time. But anyway, if we look at the diamonds, let's look at ticker symbol DIA. We see that we hit my targets to the upside. I had my target at 317.81. Congratulations to all of you who made money on that report last week. Again, we hit on every single market to the penny. And then what happened? Same thing. We moved up to this gap fill resistance up here. Now next week, like the spiders, I do believe that we're going to drop down to the moving average. I'll just draw this line as I look to the left. I could even duplicate this angle right here and attach it to my moving average, but I'm just going to eyeball that right there. I think we're going to drop just like that with a downside target on the Dow at 314.57. That's the ETF for the Dow at 314.57. Now let's move on. Let's take a look at the Qs. This was very interesting because the Qs at one point was just showing this massive red candle right on the lows today, and it looked like it was just going to keep going. We finally found some intraday support. Now notice this gap has filled. I'm going to remove that now. That gap has filled. And if you follow my gap fill rules, you'll know that 80% of the time, these gaps do fill. And then after they fill, 80% of the time, prices reverse. And I think that's exactly what we're going to see next week for the Qs as well. Yesterday, we had a drop in volume on the way up. Now we have an increase in volume, a slight increase in volume on the way down. That red candle on higher volume tells us that the sellers are motivated. So downside target of 295.73. Keep your eye on the CCI. That's about to cross that 100 mark, that red line there. Once it crosses, again, like I said before, that's a sell signal. And when the blue line here crosses the red on stochastics, that's the K line. The blue line is the K line, crosses the %D. That generates a sell signal. So I'm going to do a couple of forecasts on this one. I think that not only are the Qs going to head down to that level and again test that moving average of 295.73, I also believe that I could forecast a cross in the CCI. I'm going to see if that holds. I don't know, it might get covered up by the blue, but I think we're going to see that cross probably Monday or Tuesday. Keep an eye on that. Looking at IWM, this was extremely interesting because it hit my targets, filled the gap, and then, bam, bearish engulfing candle, just like that. That is one of the most bearish candles you can get. The bearish engulfing and bearish haramis, as we see back here. See, this is a bearish harami when you have a small red candle falling within the body of the previous green candle. That and the bearish engulfing candles are very bearish. Here is a bearish engulfing candle right here. Very slight green candle engulfed by a longer red candle after a gap fill. So we're seeing more or less a duplication of what happened back here. Bearish engulfing candle after the gap fill up here. Bearish engulfing candle after the gap fill here. So downside target, let me get to work on that one for you. That downside target for IWM is going to be 175.95. 175.95. So if you are long, you might want to consider taking profits right out of the gate on Monday, and then we can go from there. Okay, one last point I'd like to make is to really hunt for the news. I say that quite a bit because the average person is not going to get all the news that they should be getting, especially the traders and investors. What's happening right now across the country is that the strike is set to fall right around the FOMC meetings next week. Is that a coincidence? Well, perhaps, but I just find the timing of that to be very odd. That most likely is going to put a stop to a lot of the cargo that's being shipped on rail. So that's point number one, to keep an eye on that story. Another thing that I find most interesting, this one came out on the 20th, is that we're going on day 3 here. The port of Oakland in California, they basically shut down the entire port. This is the 8th largest port in the country, and nothing is moving through. So couple that up with what's happening with rail. Couple that up with what's happening with Lake Mead. I talked about this a while back, but Lake Mead continues to move lower and lower into dead pool status. What is dead pool? It means that there's no water being pumped out at all. Once it's a dead pool, there's no water being pumped out for the farmers. There are many tens of millions of people rely on Lake Mead for water. If that goes to dead pool status, that's going to put a crimp in our food supply as well, because none of the farmers will be able to grow anything without water. Very interesting. Now, while many people look at the Fed, they look at the economic numbers, they look at unemployment numbers, I'm telling you, I would not necessarily keep an eye on unemployment because that is not an accurate number. People go on unemployment, they receive the insurance, they fall off unemployment, and then you really don't know who's out of work. Looking at the other way, instead of looking at the number of people that are out of work, I find it much more valuable to look at the people who are actually participating in the workforce. And look what's happening. The participation rate is starting to drop again. See the hinging lower? We are still not at the levels we once were pre-COVID. We were starting to have a really nice recovery. More and more people are participating in the job market. And then COVID hit, obviously. And we're struggling to get back where we were at the end of 2019. So that, obviously is not going to help a recession. It's not going to help tax revenues. It's not going to help a lot of things economically. But like I say all the time, you can make money on the way down. If you're interested in becoming one of our members, call Market Rebellion. Subscribe to one of my services. You get to ask me questions directly. You can meet with me on webinars. You could talk about trade strategies. I'll teach you how to spread trade options conservatively. I'll show you how to protect your positions with risk management principles that I use for 40 years now. And if you are comfortable with your strategy and not stressing out like many investors are, then you'll most likely do better in the market, because when you trade with confidence without the stress, your profits tend to reflect that. I always tell people that trading with scared money usually doesn't make you much money, and your profits work in direct proportion to your confidence level. So if you're trading with fear, well, guess what? Your profits aren't going to be maxed out like they should be. We have a lot of great success stories. If you're a member and you would like to talk a little bit about your success, for those who are thinking about it, go right to the Q&A box down below, the comment field. Go ahead, go for it. I've been spending a lot of time in there. If you're listening to the weekly market report on the Market Guys YouTube page, I'm not responding to the questions there. You could still pick up the video, of course, but I am responding to a lot of the questions that are on the Market Rebellion YouTube page. So if you go to the Market Rebellion YouTube page, click on subscribe, click on the notification bell, you'll get alerted when this report hits YouTube, and then you'll be able to watch it right away. Interestingly enough, YouTube puts out an analytics report, and I'm noticing that a lot of people are not watching the video until after the market closes on Monday. Well, what good is that? I mean, you're missing out on all the opportunity that you could be getting on Monday from watching it on a Friday afternoon or over the weekend. So thank you so much. Our numbers are growing. Our number of subscribers are growing. The number of views are growing. That's all thanks to you, because you hit the like button, or you subscribed, or you hit the notification bell, or you made comments. Every time you do that, it throws us into the menu on YouTube, and more people find us. We have actually more people finding us just from the menu itself than those who actually subscribe to the program. So again, thank you, thank you, thank you. Have a great weekend, and we'll talk to you soon. So long.